First tonight, it's now 6 days since Donald Trump's global tariff bombshell, and the diplomatic language is becoming more and more heated, particularly between Washington and Beijing. China has vowed to fight to the end against President Trump's threat to raise tariffs on Chinese imports to more than 100% as the world's two largest economies come closer to an all-out trade war. Donald Trump said he would impose an additional 50% tariff on Chinese imports if Beijing did not rescind its retaliatory taxes. Mr. Trump also said there'd be no negotiations with China. Trade between the two countries exceeds $600 billion per annum. Last week, China imposed 34% tariffs on U.S. goods in response to Mr. Trump's earlier 54% imposition on Chinese goods. The Chinese government had promised further countermeasures. It accused the Trump administration of blackmail and said the taxes were groundless and a typical unilateral bullying practice.
Looking at that, we have many countries that are coming to negotiate deals with us, and they're going to be fair deals, and in certain cases they're going to be paying substantial tariffs. They'll be fair deals.
Do you expect any of these deals to be made before April 9th? And secondly, there have been some mixed messages from your administration. You're talking about negotiations, and yet others in your administration are saying that these tariffs are actually permanent. What is the action?
Well, it could be. They can both be true. There can be permanent tariffs, and there can also be negotiations, because there are things that we need beyond tariffs. And so there are a lot of things outside of tariffs, but tariffs are very important. But there are a lot of things like opening up countries that were totally closed. China is essentially a closed country. In fact, it is a closed country. And what they do is they charge tariffs so that if you sell cars or if you sell anything, nobody's going to buy it because the price is out of control. But that's true with a lot of other countries also. So we're going to get fair deals and good deals with every country. And if we don't, we're going to have nothing to do with them. They're not going to be allowed to participate in the United States.
I want to stress once again that trade wars, tariff wars have no winners, and protectionism has no way out. Chinese people don't make trouble, but aren't afraid of it. Pressure, threats and blackmail are not the right way to deal with China. China will take necessary measures to firmly safeguard its legitimate rights and interests. If the US ignores the interests of the two countries and the international community and insists on a tariff war and a trade war, China will fight it to the end. I think what the US side has done does not show willingness to have serious dialogue. If the US really wants to talk, it should adopt an attitude of equality, respect and mutual benefit.
Well, for more on this, I'm joined now on the line from Palm Beach, Florida, by the Wall Street correspondent for Business Insider, Reed Alexander. Mr. Reed Alexander, thank you very much indeed for joining us. So first of all, how have the markets been reacting today? I understand it's a much calmer day and there have been some recoveries.
There has been some recovery, which is welcome news for investors and for those who are involved in trading in the marketplace. However, the markets are not showing signs of long-term kind of up and to the right returns for investors. There is a hope that some investors who identified an opportunity out of this week's market carnage might be driving stocks up because they're saying, let's buy low, buy at the dip. Now's the time to make a move. But we're just not seeing full recovery yet because the fundamental uncertainty persists. And that's going to continue to hover over market action in the coming days, which should be somewhat volatile. And other kind of deeper, signals about the health and the vitality of the marketplace, like Wall Street's deal-making apparatus. That's essentially on ice as people wait to see what's going to happen with cross-border deal-making right now.
Well, you guys are pretty expert at these sort of stock market things, and we're not. So, you wouldn't necessarily say that investors think that things are back to normal because the markets are calmer. They just think that the level that these companies are trading at the moment is appropriate, but that's not to say that they are no longer concerned about that escalating trade war and the possibility of the global economy falling into a recession?
Well, what you bring up about recession is very much on everyone's minds. Let's just talk for a moment about how these companies are priced that are trading right now. The valuation of a lot of companies on the stock market is already inflated in an inflationary environment. It's already higher than where the company's performance in many cases would suggest that these companies should be. So there's some inflation that's driven the market up sort of artificially. However, you bring up the R word, recession. People are very concerned right now about the secondary and tertiary impacts of the trade war and of tariffs on things like stagflation, on the potential to drive the US economy into a recession. We came very close yesterday to what is considered a bear market. That would have been a 20% drop. And that's what really kind of provoked this recessionary fear in a lot of people's minds. The problem with a fear like that is when the specter of recession fear gets on the scene, that unsettles a lot of people, and it can be a little bit of a self-fulfilling prophecy. And the last thing I'll say on this is it's anybody's guess what could happen, but JP Morgan, the biggest US bank, upgraded its forecast for a recession this week from 40% to 60%, saying there is now a greater than half likelihood, a majority likelihood chance of a recession before the end of the year in the United States.
Well, that's very interesting assessment. Let's talk a little bit about the confrontation that we're seeing. I mean, is it a trade war or a war of words between China and the US? I mean, what is your assessment of the escalation between the two countries?
The escalation doesn't surprise me because there's a lot of theater in that relationship for all different reasons, but especially because there are a lot of counterparties that are involved in negotiations and deal making and do business with both sides. So trying to project bravado and, sort of win people over in one camp or another is very, very important to both of these people, to both of these respective countries. The words are strident. The words are tough. We're going to fight to the end. We're not giving up. But I do think there's a fair degree of posturing. So, and there always is with President Trump, and there typically is with a lot of what Beijing has to say as well. So a lot of bluster, but I do think things will stabilize. I think there will certainly be tariffs, but 100%, 104% is absolutely ridiculous. And it's sort of mutually assured destruction for both sides if this really tips over into sort of a very detrimental territory. But I think what will happen is we're going to see some negotiations between other East Asian countries like Japan and Korea with the United States to reduce some of their tariff burden. Then China-US dialogue may increase. In the meantime, though, I would very much expect Beijing to be taking advantage of the vacuum that Washington has opened and be thinking about, particularly in Africa, where can they step up the investments they've already made and pull other countries into their sphere of influence and away from the United States.
And who stands to lose more in this tariff war between the US and China?
China. China's already having a very tough time economically, domestically. And I do think that there are just things that China cannot do. Like, for instance, it, has trouble sort of developing semiconductor chips. It has to import a lot of those that make it more reliant on the global marketplace than the United States. Both sides can do a lot of damage to each other. For instance, American farmers that are exporting agricultural goods could get hit very badly. But I think if there was going to be somebody that is more vulnerable, it's probably China than the United States right now.
And of course, given that neither side, at least based on the rhetoric that we're hearing, neither side is willing to back down. I mean, those latest tariffs will kick in on Wednesday, won't they?
They will. They absolutely will. But I also think that that's some bluster, too, because whilst the tariffs are, sort of hours away from going into effect, the bottom line is if either side telegraphs that it's willing to make concessions or to cave, or bow down, then genuflect at the knee, immediately their negotiating position erodes, corroded by their own admission that they would offer some things in order to reduce the pressure on them. So both sides have to say they're in it to win it, but who knows what the politicking and back channeling, either directly between Washington and Beijing or through intermediaries like Cambodia, Vietnam, Japan, Mexico, whatever. Who knows what that civic discourse between the two countries is looking like? So I would be skeptical that neither side is willing to move.
And just looking at the figures here, it says that trade between the two countries exceeds $600 billion per annum. Who's got the bigger share of that? And I apologize if you mentioned that earlier already.
No, I actually couldn't tell you concretely which side is importing more from the other, but I would probably think it would be the United States because there's a significant manufacturing economy, obviously, in China and East Asia that is just constantly moving goods over into the United States. So this will certainly, for that reason, spur a lot of economic opportunity in the United States if the U.S. were to be, more negatively impacted in one way or another that we haven't anticipated. It creates an opportunity for local businesses to try to fill those supply chain gaps, get goods out to people. And it does create some competition domestically in the marketplace, which could drive prices down for consumers. But consumer pricing will certainly take a hit on both sides. And as the U.S. imports technology, retail goods, clothing, other kinds of items from China, it's not going to be like Chinese manufacturers that are going to pick up all the slack. It's going to be a lot of U.S. buyers as well. And that's what's going to drive an economic slowdown.
And in that regard, I mean, you're obviously in the United States. I mean, you just give us a sense of how people there are reacting to these tariffs and why Mr. Trump is insistent on doing them.
This is a very polarized time in the United States. And you have people on both ends of the political spectrum who are responding to this very, very differently. There are a lot of business people in recent days, Wall Street business people, traders, bankers, investors, private equity business people who control billions and trillions of dollars in capital that they want to invest into the market, who were hoping that President Trump would come to office with a pro-business agenda and fix what they felt was a really constrictive economy in recent years that prevented them from deploying a lot of that money. That didn't happen. The market is now in turmoil. So you have a lot of business people who feel very let down by the administration right now and feel like this is not the way forward. On the other end of the spectrum, there are some Trump devotees who look at this and say, well, this is what the president always planned. Give him time, give him space to negotiate and work behind the scenes. The markets are coming back. He's promised a strong, healthy marketplace for investors. Give it time. But I think by and large, most people who are following what's going on closely think that this is probably a dark road to be going down.
Right. And I mean, meanwhile, of course, amidst all the turmoil, we understand that gold prices are going up. I mean, why are they going up? And what does it mean when it's described as a safe haven as stock markets face something of a meltdown?
Gold has been going up for a long time here in the United States. The price of gold recently reached a record several months ago, and it continues to appreciate in value. People right now think that gold is sort of like a reserve currency. Obviously, it's finite, and it's sort of impervious to a lot of the other technological movements that are underpinning so much of economic development right now, like artificial intelligence. Regardless of what happens with tech companies, oil imports, etc., there's always going to be a premium on gold. And right now, a lot of investors are just wanting to have that asset because everybody believes that that is a really smart way to make money. It used to be real estate, but the real estate market has been so volatile in the US. Everybody right now seems to agree that with gold going up, if you can get your hands on some of it, you're pretty much, assured that you're going to make money later on.
And just as a final assessment from you, and we appreciate very much the time that you've taken to talk to us, just looking at the big picture, do you see world trade and everything just going topsy-turvy as a result of the arrival of Mr. Trump in the White House, all the rules out the window, the WTO and so on?
It seems to be that is the objective here, to weaken international security alliances, trade partnerships, to create global instability, keep everybody guessing, foment, some sort of chaos. And out of that, maybe it's easier to throw people off balance and win some things for the United States. But a lot of things that this administration will do that will have global consequences are really done in spite of those consequences, not because of them. They're done because even if there's pain, it plays to a lot of the political base that has powered this administration into office. So there's a feeling that they need to continue to serve that base's interests. And that base of voters loves this idea of punishing international partners that they feel have freeloaded from them, taken advantage. So I think for some time, things are going to be volatile. And every time we say it's going to stabilize, we said this with a lot of President Trump's cabinet appointments in his first few weeks in office, with the people he was appointing into the job. Like, there's always a second act of some sort of turmoil, so we will see if that's by design or not. But I do predict it's going to be volatile. It's going to be choppy seas for the next couple of months.
Mr. Alexander, we really appreciate the time that you've taken to talk to us. Thank you very much indeed. Reed Alexander is the Wall Street correspondent for Business Insider, and he was talking to me on the line there from Palm Beach, Florida.